What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is February 21st of 2019. Well, folks, I hope you all are having a great day wherever you are. And today on the update, we've got a few key topics to discuss. We're not only going to be discussing the potential of starting to see some serious demand build up for crypto investments and blockchain investments abroad in pension funds, but along with that, taking a review over the past month or so in equity markets and taking a look at the $9 trillion rally in stocks abroad. So we've got lots of things to discuss. Let's not push it off any longer and dive right into the video. Real quick, two things that I do want to share with you guys. Not only am I going to be attending Tokenomx, the second Tokenomx conference in Bangkok coming up in the next week, but along with that, I want you guys to definitely check out the Yellow channel as well. So for links on those, check them down in the description down below if you want to see some awesome content in the blockchain space as well as an awesome conference. Would love to meet you guys there. And along with that, later on in the video, I'm going to be showcasing a really cool collaborative sponsor that Crypto Daily and I did, where we actually played a game called Vibe or Die, created by the Vibe community. Now, if you guys are interested in looking at this, there's some gameplay footage I'll be sharing towards the end of the video, but a good few minutes of footage, which is really fun. And it was a good sponsor for the channel. We had a good time doing it, and it's cool to see a real product being built in the space. So anyways, check that out later on in the video if you guys are interested. Alrighty, so let's go ahead and dive into the actual update for today. Taking a look over markets over the past 24 hours, things are quite neutral at the moment. Most players in the red, but nothing too serious in markets right now. After the leap up we've seen in Bitcoin towards the $4,000 range. If we take a look at the market overview, market cap is back up towards the quarterly highs here that we saw back in December from the rebound in markets, again following really Bitcoin going back to its same levels. Now, even with this, at the same time, Bitcoin dominance is little unchanged here. So we're continuing on the same trend here. We're continuing to see a decline in Bitcoin dominance, lower highs on it. This is exactly what we want to see. Now, there's not too much TA I can really do at the moment, guys. What we do want to see in the case of the bulls here is a nice solidified hold over 4,000. Now, we're really pressing up towards that at the moment, at least at the moment of recording this video. And until I get a nice good breakout above there with some serious volume, I'm not going to get too optimistic in this case. I've talked about the idea of potentially testing a double bottom in this market. It could possibly happen, but at the same time, if you do break above 4,000, it could be very likely that the lows that we've seen, or at least the rising lows more specifically, could be indicating that we're ready for an up move. So again, that's a sign of a bottoming market if you can hold the same bottom multiple times, or if you're making higher lows every time. That can signal confidence. And with price action for Bitcoin, as well as the total market capitalization of crypto hitting towards the 50-month, the 200-week, a lot of these long-term moving averages, this is really good stuff to see. And there's a possibility we might be moving higher soon. Alrighty, so let's go ahead and talk about these two big pieces of news, guys. First, pension funds investing in crypto, a sign of things to come. Now, I do want to make sure this doesn't, capture too many eyes in the wrong way. I know a lot of people, and I've referred back to this on Twitter back during the summer of 2018 when there were talks of a Bitcoin ETF brewing, and that is the optimism behind pension funds investing in crypto and how much that would definitely set a demand not only for crypto, but obviously grow the size of this market and its exposure. Now, this is basically an article piece covering about $40 million that was raised under what's known as Morgan Creek Digital. And this is basically a fund that's going to invest in a variety of blockchain companies, things that have to do with blockchain technology in some way, shape, or form. And they do also plan for some exposure to cryptocurrencies. This is being headed up by the founder, Anthony Pompliano. You guys have probably seen him on Twitter. "The virus is spreading" is his infamous quote. But this fund basically manages over $1 billion in assets. So it's quite reputable here to see that Morgan Creek is actually making some serious strides here and raising a few $1 million in order to invest in blockchain startups. However, notice what I'm saying here. There's a lot of titles in these articles that are basically saying it's a crypto fund. And if we actually go through the article here, you'll see that as of now, the vast majority of it is not directly in cryptocurrencies. In fact, so far the fund does not own any crypto from what I read. In that case, and because of that, at the moment, this is just basically some exposure to companies that are either dabbling in blockchain or companies that do directly work in blockchain but aren't really cryptocurrencies. So I'd say that that's not really what caught my attention. What did catch my attention in this article is this topic here, talking about setting a new precedent. And this is in regards to the demand on the one financial product that we have traded on public exchanges in the United States that deals directly with ownership of Bitcoin, and that is GBTC, right? the Grayscale Investments ETF here, and they actually reported in their latest quarterly report that there is a shift in demand really for this ETF, and they can get a relative gauge of it. I can only assume that they can't have every single data point that they want, but when it comes to institutional investors, and measuring that maybe against not only different types of institutional investors, but also accredited investors, they can usually separate the volume here, and they can separate the buy orders. Because usually when it comes to an institutional side, they have to report these things if they're dealing with enough money. You could go check what George Soros is investing in, or Warren Buffett. You can go see these things publicly, right? So let's go ahead and take a look at this, because there's one thing that really excites me. Institutional investors in the full year of 2018 comparative to Q4 definitely saw a little bit of decline, as well as accredited investors and family offices. But here's the thing that interests me: retirement accounts. This is where I see the excitement right now. The reason I say that there's some excitement in regards to retirement accounts getting exposure to GBTC is it's telling me that people who are managing pension funds, people who are managing these retirement accounts, are starting to add some exposure to cryptocurrencies. And this is on GBTC, which has a little bit of a premium comparative to actually owning Bitcoin. So it's good to see that this obviously is filling some requested demand. I think people have wanted at least 1%, or in some cases, people have a little more of an appetite for risk, a 10% exposure to Bitcoin. Whatever it may be, I think this is a good first step, and I want to see this trend continuing. So I'm glad Grayscale has actually led the charge on this, and I hope to see more of this over time. Going on, though, let's go ahead and talk about this stock market rally. I'm going to keep it quite brief, guys. I've already talked to you guys on the channel, and also more specifically in our newsletter that we do on the channel, about the rebound we have seen in January, and how I feel most of it will be faded out here in the coming weeks, going into the later part of February as well as early March. The reason I stand by this is that we're starting to reach towards the range. We've had a great rebound in markets due to a lot of fundamental changes in monetary policy. The global central bank balance sheet allocations have increased. Not to mention, there has been a tapering off in the rise of interest rates over the last few FOMC meetings in the United States, and even the Fed has talked about how they're not going to continue an autopilot on the reduction of the balance sheet holdings. So all of this has helped markets up. Not to mention the reallocation of pension funds back in late December. All these things propped up markets from the lows. But I don't really care so much to argue about that, because I know some people will agree or disagree on that. What I do want to say is that traders should watch out, because across the board in global markets, which are intertangled, and it's important, this is why I encourage macro trading or having a macro trader perspective. There is a variety of different markets that are starting to hit major levels of resistance. You can see, for example, here, the MSCI AC Asia Pacific Index, taking in a lot of Asia markets, starting to hold resistance here at some of the key moving averages, and coming up on the 200-day, which is probably going to serve as the biggest line of resistance. If we do break above there, this could signal a good short-term rally for equities, a continuation. But I have a hard time believing that this is the case, because there's a lot of different equity indicators here. For example, we have the Stocks Europe 600 price index, which is starting to hit towards that range where we've seen resistance in the past. Not to mention overbought here on the RSI. So again, most of these major indexes, not only that, the S&P 500 and the New York Stock Exchange, specifically the NASDAQ, have gotten back into what I believe are overbought ranges, not just on the RSI, but towards ranges of resistance in the past where we saw pretty sharp sell-off. And after this kind of rally, guys, we're starting to see the gains slow down here. The momentum is starting to slow down. This is not really the time to get optimistic, right? And there's also some divergences as well. I like Bloomberg. They actually, make good use of the terminal in their articles. And you can see here that there's a pretty big divergence between the cyclical sectors, or the defensive sectors, in this case, less risk involved in the index here, comparative to the broader S&P 500. And you see this broad separation here. And usually when there's a separation, you can see that they come back to correlate with one another, right? So it's good to see these separations, and again, to have them correlating back and to meeting back with one another. And along with this as well, again, we can see here emerging markets are looking probably more attractive here, because they're not overbought right now. Not to mention, they're riding in between these moving averages. And I like the formation here. I like the fact that we tested at 950 here on the MSI Emerging Markets Index. And it looks like it's coming back up. Now, it could try to make it up above here, but if US and broader markets get weighed down, I don't think emerging markets are even safe in this case, guys. But they have been more oversold comparative to others. But this has been mostly due to really cheap commodities and the fact that most of these are export economies, right? So anyways, in my case, for summary on equities, guys, I would say that, we saw, a lot of joy and happiness in January, but I'll tell you that blood, I not only believe will return by the end of this month, so we've got, pretty much another trading week, but along with that, we're really going to see a lot of the blood return in March of this year, finishing off Q1 in a relatively neutral / bearish tone. So I definitely want to know what you guys think down below in the comments, as well as what we talked about in the pension funds. Do you think that there's a likelihood that we'd see some investment products like ETFs come out relatively soon? If you guys think so, leave a comment down below. But anyways, let's go ahead and dive into some of this awesome gameplay that Cam and I did from Crypto Daily for the Vibe Hub platform in their new game, Vibe or Die. There's a lot of good funny moments. I hope you guys stick around and enjoy the video. So what you're seeing right now is some early stage footage of a flagship title that's going to be launched on the Vibe platform, known as Vibe or Die, an FPS arena-styled game that allows you to put tokens at stake in order to compete for higher rewards against other players. The more players that you kill within the game while staking tokens will receive higher rewards. The game itself is not only extremely fun, but it's also very reminiscent of traditional arcade shooters and can bring a lot of good memories between you and your friends. So after the video, if you guys are interested in trying it out yourself, I'll leave a Medium article link down below that's going to give you all the details on how you can download Vibe or Die and get started within the game. It's extremely fun and I recommend you guys giving it a chance. But without further ado, here's some gameplay footage between Crypto Daily, Nicholas Live, some of the development team, and myself.
Oh crap, I need to reload. I never need to reload.
Crypto Daily went on a tangent.
I know, like,
13 kills. What?
None of them have been data dash so far. My opportunity killed my YouTube competitor.
Yeah, right.
Die. No.
Who can we camp?
I don't think I've killed him once.
oh, hey, there's some portals by the subways that they can transport you, but you can also like jump on them and they'll like shoot you in the air.
Oh, cool.
Oh. That was crazy.
I finally
It landed on my head.
I finally got her up on the rock. It took me a few seconds.
Sneak up on him. Can I do it? Can I do it? Yeah! Yeah!
Alright guys, I've given up covering cryptocurrencies and blockchain. I'm now going to become a Twitch streamer for Vibe or Die.
Hey, that's what's up.
Oh, the dumbest idea I've heard all day.
Oh, I got you caught in the middle.
Oh,
you guys DP'd me. That was like a gangbang.
that was cheap. He took my kill.
I spawned in some maze. I have no idea where I am.
Well, and at least we know what Crypto Daily does when he's not making videos.
I was about to say, if YouTube doesn't work out, then, yeah.
Yeah, just a phenomenal gamer. It's undeniable.
All the top YouTubers are ex tournament gamers. Apparently.
It certainly would be easier to produce content.
Yeah, that. Oh shit! You were right there. Got him. He's a real man. He lives. I got him.
He bleeds.
He bleeds his own blood.
These were just a few clips of the moments that we shared on the Vibe or Die platform, and to put it simple, I had a fantastic time playing the game. Now, if you guys are interested, again, please check out the Medium article down below for all the details on how to get the game set up. The Vibe platform is really focused on getting real users and real adoption, and that's why they're trying to build real products within the ecosystem that people can actually use and engage with, that will eventually build value for the Vibe ecosystem as a whole. That all being said, thank you guys so much for watching the video, and I'll see you all in the next one. Stay tuned.